Jonathan Samuelson of Harris Balcombe. Thank you, Jonathan.
Thank you. Good afternoon. I'm going to speak to you today about the problems that arise when you have a claim if you haven't made sure that your policies that you have in place are all adequate and appropriate for your businesses. In the current climate, insurers will, if they can find a way not to pay a claim, that is the route they will try and adopt. And even when you've persuaded an insurer to accept that they are liable and that they should pay a claim, they will try to make sure they pay not a penny more than the absolute bare minimum that you can drag from them screaming. That is the way it is. It didn't used to be like that. Insurers, used to make ex gratia payments and so on. It just doesn't happen now. And to a degree, the larger the claim, the more difficult it is to get an insurer to pay up. So that is the climate against which you are operating when it comes to make a claim. And the problem areas, the sort of the usual suspects, if you like, are around warranties. So these are effectively promises that you make as part of the contract with the insurer. Legal entities, is the description of the business accurate in the policy, and is the name of the business correct in the policy? Issues with the insurance of buildings, underinsurance, and so on. Likewise, underinsurance of plant and machinery and contents, and likewise with stock. And then with business interruption, which is the area where there is most confusion and problems. So if we start first of all with warranties, what is not really understood by most policy holders is that if there is a breach of a warranty, so say there's a warranty that says there will be an intruder alarm in full operation at any time that the premises are not occupied. I'm paraphrasing, but that's a typical sort of wording for an intruder alarm warranty. And if you have, say, a flood, most people would think, well, if the alarm wasn't working, it doesn't make any difference. It was a flood. The premises were going to flood whether the alarm was set or whether it wasn't set. That is not the case. If there is a warranty which says you must have an alarm set, or you must have your stock on pallets at least 6 inches above the ground, and you're in breach, whether it's causative of the loss or not, it is highly likely that your insurer will say, well, you're in breach of the warranty and we're not going to pay your claim. And just by way of an example of that, I did a claim several years ago for some floods in Lewes in Sussex. And my client was a carpet wholesaler, and he'd had, I think it's the River Ada, burst its banks and ran through his warehouse basically and ruined an enormous quantity of carpets. And he had a mezzanine floor with offices in the warehouse, and the loss adjuster acting for the insurance company turned up before we were appointed and asked one of the secretaries, were those windows locked last night? And she said, no, we don't lock that window because it's so difficult to reach over the desk to get to it, so we don't bother with that one. And they had a locked window warranty on the policy because they'd had several break-ins, kids breaking in and stealing the petty cash, and I think they'd had a laptop stolen and so on. And after the umpteenth break-in, the insurers applied a locked window warranty. There was a window not locked, and the insurers, who were a household name, refused to pay the claim. And we went and took advice from an insurance QC who said, don't waste your money on this. The insurers are right. They are entitled to avoid the claim. So the first thing that you all need to do is, firstly, you need to know what are the warranties of which I am obliged to comply. And secondly, am I complying with them? Can I comply with them? Sometimes there will be warranties in place that you can't actually comply with. Often, for example, there will be a waste warranty. The premises must be swept up and any waste taken outside at least 5 meters from the building and placed in metal receptacles with a metal lid. Well, sometimes that's not a problem, but for a number of businesses that would be an absurd requirement to expect them to completely sweep up and clean every part of their premises every night before people go home. It's just not possible. The key to these things is that if you raise it with your broker or with the insurer ahead of time, almost always they will say, not a problem. We will adjust that warranty or remove that warranty. And the reason for that is because it really isn't much of an issue for them. However, the day after there's been a fire, all of a sudden it's a major issue. And you'll be told, oh, if only we'd have known that you weren't locking the windows, we'd have never covered you. And you say, but what difference would it make? You know, it was a flood. Whether the window was locked or not, we were always going to flood. And they will say, yeah, that's absolutely true, but it's a warranty. And therefore we are entitled to avoid the policy. And they do. So that's the first thing. The Insurance Act, the new Insurance Act 2015, will change some of that. But firstly, it doesn't come into force until next summer. And secondly, it's widely expected that the insurers will challenge in the courts those issues. So there will be a lot of litigation around causative or non-causative breaches of warranties. And it's a place you don't want to be, really. So make sure you are complying with your warranties. And if you can't comply with them, make sure they are changed so that you can. Warranties are known as suspensive conditions. So if you are in breach of a warranty and you then fix it, so if the alarm's not working and then you have the alarm company in and it's then mended, providing that all happens before any incident, that's fine. It didn't used to be fine. The insurers used to be able to say, although your alarm was working at the time of your fire, it wasn't working 3 months ago, and you are therefore in breach of the warranty. Fortunately, the courts, through case law precedent, changed that. Most policies have what is called a basis clause in them, and that says anything, any information you give to the insurers forms part of the contract. It becomes a information or a document upon which the insurers are entitled to rely. And that becomes an issue, for example, when you fill in a proposal form, which will ask all sorts of questions, including, you know, what sum's insured and all the sort of details about the business. But they will also ask questions like, for example, has any director of the business or partner in the business ever been a director or partner of any business that has ever entered into any insolvency process, say? Now, if you're, I don't know, sales director, for example, 10 years ago worked for a company that went bust, that needs to be disclosed, because after your fire, they will check every director what's in their past. And if someone's filled in a proposal form which doesn't give all of that information, and although it's completely trivial, of no consequence at all to the insurer if they had been notified ahead of time, after the fire they will say, oh, if we'd have known your sales director 10 years ago worked for such and such a company who went bust, we would never have insured you. It's all nonsense, but it's a reason for them not to pay the claim. And the bigger the claim, the more likely they are to say, we're not paying. And it's a breach of a warranty. So the key there is to try and be completely transparent, including any kind of skeletons in the cupboard. Because almost certainly, well, I mean, there's someone's got a conviction for arson, that would be a problem. But someone who used to work for a company that subsequently went bust really doesn't matter. If it's disclosed to the insurers, they'll say, fine, not a problem. Other warranty issues can include things like, well, I've mentioned intruder alarms, forklift truck charging points. Often there'll be a warranty that says you cannot charge a forklift when the premises are not occupied, which in practical terms may be a big problem. If you're reliant on forklifts and they're being used all day when the business is running and you're charging them at night, that may be an issue. You may not be able to do that, and then how are you going to have working forklifts every morning? It needs to be addressed ahead of time. Storage heights on racking. Often it will say something like, you cannot store closer than 3 meters to the roof. Well, depending on your warehouse and how it's configured, that may be a problem. There's almost always a warranty that says the electrical circuits have to be checked out and certified by an NIC, EIC qualified electrical engineer at least every 3 years or 5 years. That is always checked up on, and after the event is too late to get that done. So, as I said before, know what the warranties are and make sure you are complying with them. Legal entities, you need to make sure that the business named on the policy is correctly named. So if you are a partnership, that's what needs to be on the policy. If you used to be a limited company, that needs to be changed, because an insurer, it's quite possible they'll say, well, hang on, we thought we were insuring ABC Limited and not the ABC Partnership. And you'll say, yeah, but it's effectively the same business. What difference does it make? Same owners. And they'll say, oh, well, it is different, and it's not what we thought we were insuring. Another problem area is where the business occupies a building that is not owned by the business, even though the business may be the tenant and may be paying the insurance premium to insure the building. If the building, say, is owned by the proprietors of the business privately or through their pension fund, that's got to be noted on the policy, because if it isn't and the building burns down, the insurers will say, well, this building isn't actually owned by the ABC Partnership or ABC Limited. They have no insurable interest in this building, so we're not going to pay for the damage to the building. It needs to be checked. You need to make sure that the description of your business is broad enough to cover all of the activities. And I mentioned here we did a claim for a care home that also offered daycare, a residential care home, which also offered daycare, sort of respite care facilities. And they had, in fact, it was a flood, and their policy just referred to a residential care home. And when it emerged that they also did quite an important part of their business was respite daycare for several local authorities in the vicinity, there was a problem. It was sorted out eventually, but it delayed things for months before the insurers accepted liability. Non-insurance or underinsurance of buildings. First thing is you've got to obviously make sure all of your buildings are included on the policy. I've been involved in several situations where a business has bought another building. It's particularly relevant for retailers who are often buying more shops and getting rid of shops and so on. There needs to be a process to make sure the policy is updated to include any newly acquired buildings, because if they're not on the policy, they are definitely not going to be covered by the insurer. A building needs to be insured at its reinstatement value, and that means if it was utterly destroyed, if there was just a hole in the ground, what would it cost to build like for like what was there the day before the fire? And that will include car parks, roads, gates, fences. It will include demolition costs, professional fees. That can add, just the demolition cost and professional fees can easily add 20% to the value of the reinstatement just of the buildings. If you are occupying, for example, a big old mill with 2-metre thick walls, even if you would never rebuild it as a mill building, the figure to include on the policy is what it would actually cost to rebuild it as a mill building with 2-metre thick walls. If you would have no intention of ever rebuilding it like that, if you'd say, well, if it burned down, I would put back a steel portal frame building like this, that needs to be noted on the policy. You need to have what's called a modern equivalent clause. Otherwise, there will be horrendous underinsurance, because the insurers, their loss adjusters will say, well, the value at risk, as it's called, should be what it would have cost to build exactly as it was the day before the fire or whatever it is that's destroyed it. It will also, I'm just noting, it will need to also include things like the electrical installation and air conditioning, things that you can't really remove from the building. I've talked about professional fees. I just want to talk a bit about, two things. Often, my firm's been involved dealing with a claim, and I'm an accountant, but I know roughly, when I look at a building, what kind of ballpark figure it would be to rebuild it, to reinstate it. And I've looked at the insurance policy and I've thought, this is like half what it should be. And I've spoken to the insured and I've said, how is the building only insured for £500,000? It looks to me like it should be at least £1 million. And I'm a mere accountant. By the time a surveyor's gone through it, I may be out on that figure. And they've said, oh no, we've got a valuation. And they give me the valuation, which isn't a reinstatement valuation, it's a valuation that's been done for the bank, for lending purposes. And it sets out what would this building be capable of being sold for if we had to call in the loan. That is, the market value of a building is not what you should be insuring. It is the reinstatement value. That's what you need to have. You need to have a reinstatement valuation, because the market value almost always will be horrendously out of line with what it would actually cost to rebuild. If you have a listed building, in my experience, they are going to cost probably twice as much as an unlisted building to rebuild, and it will take twice as long. There'll be an involvement with the listed building officer of the local authority. English Heritage will almost certainly be involved. Everything takes forever, and it all costs an unbelievable amount of money. Because I just also, by way of an example, I did a claim for a restaurant in Guildford, which occupied an absolutely exquisite 17th century timbered building, grade 2 star listed, and it burned down. The whole roof was destroyed, and the English Heritage said, we want you to reclaim and use as many of the tiles as you can and source replica tiles for the rest. Fine, no problem. So it would look pretty much like it did previously. And then they said, and we want you to use oak inside that is hand sawn, like they used to, with a top dog and a bottom dog with a giant saw in a sawing pit. Fine, you can get that done, and it would look the same. And then they said, oh, and we want you to get 300-year-old oak. And you say, why? Why would we want to use 300-year-old oak? No one is going to see this oak. It's going to be up in the roof, in the loft. Will never be seen, other than when the cold water tank needs fixing or something. No one will see it. And they said, we don't care. We want you to get 300-year-old oak, which you can get from France, and it costs 100 times the amount of ordinary 50-year-old oak. So beware if you occupy a listed building. Under insurance of plant and machinery, how am I doing for time? I'm running out. Again, make sure you've got all the main bits of kit included. The basis for insuring machinery is, again, it's reinstatement, new for old. Virtually all policies are written on a new for old basis. But that means even if you have a piece of equipment that you bought second hand and wouldn't dream of replacing with a brand new piece of equipment, if you have a new for old policy, the sum insured must represent what it would cost to go and buy a brand new piece of kit. If you want to insure on a second-hand basis, the policy for those pieces of equipment that you would never replace new needs to be covered on what's called an indemnity basis, which is the second-hand value. If that doesn't happen, it often leads to very, very serious underinsurance problems. And also, the written down value in your accounts of your plant and machinery, that is not the right figure, neither is the original cost. It's what would it cost to go out and replace everything brand new. And you need to also include all the, as well as the big bits of equipment, also the trolleys and the racking and all of the trivial bits and pieces. If you're a printer, it will need to include your printing plates and so on. Under insurance of stock, likewise, stock's normally insured on the basis of the cost of the raw materials, but there are other ways of insuring stock as well, particularly under various marine policies, stock throughput policies. You can insure stock at its selling price if you want to, but you need to make sure whatever basis you are insuring upon, the sum insured reflects that basis. You need to include the shipping and duty and transport costs and so on as well. Now, business interruption. This is cover for loss of profits. The main problem and the area that leads to more litigation against brokers for negligence than anything else is getting the gross profit figure wrong. And the reason for that is that the accounts definition, if you look at your accounts, it will say something like sales £2 million, purchases £1.2 million, production labour £500,000, gross profit £300,000. And that's fine. However, the insurance definition of gross profit is completely different. The insurance definition of gross profit is sales less purchases. So for insurance purposes, the sum insured for gross profit should be £800,000, 2 million less 1.2, as opposed to £300,000, which is what the accounts say. If there's a fire or a flood or something, and you have a claim under your business interruption policy, and your sum insured is just £300,000 instead of £800,000, the insurers will apply what they call average, which means you will only get 3/8 of your claim paid. And that, for many businesses, after some catastrophic event, could be curtains for the business. It could be that the business cannot survive losing 5/8 of their business interruption claim. So that's the first thing to ask. Is the correct gross profit figure included in my sum insured on the insurance policy schedule? But also, what do you do about things like subcontracted costs or agency labour? Is that a purchase? Is it wages? Is it a purchase? All needs to be checked out ahead of time with the broker to make sure that you get it right. The day after the fire is too late. Carriage, packing and freight, that's normally classed as a purchase in the policy, but if you run your own transport fleet, if you've got your own trucks and drivers and so on, that will not be a cost that you can just turn on and off like a tap in line with the sales. So if you have some catastrophic event and the warehouse burns down and you've effectively not insured the cost of carriage, packing and freight, you may well find that you still have to pay those costs, because you can't just stop paying the leasing cost for the trucks, but you're not covered for it. So it needs to be thought through. The maximum indemnity period. The default setting on business interruption policies is 12 months. After that, you're on your own. But even if you were going to replace a building with an exact copy of what was there the day before the fire, you will have to get planning consent. That will take at least 3 months. And you cannot start rebuilding until you have the planning consent. If you're bringing stuff in from China, say, or anywhere in the Far East particularly, and you want to reorder the goods that you just lost when your warehouse was flooded, the likelihood is there will be a lengthy delay. And if it's seasonal goods, if you're supplying, I don't know, ladies' dresses, and you had a warehouse full of summer dresses, and they're destroyed, and you phone your supplier and say, I've got to have another, however many thousand dresses it is, of these types, they'll say, well, we're not making them now, we're making winter coats now. We won't be making summer dresses again until October of this year. And you physically cannot replace the stock because of the seasonality of it, or because of your production slot with the factory in China. It can take an insurer weeks or months often to decide whether or not they're going to accept liability. And again, it would be a very brave policyholder who decided, well, I'm going to crack on and rebuild my building anyway, without knowing that the insurer is going to be stood at their shoulder writing out the checks. This can all take months and months, and you also need to be covering not just for the period until you can reopen, but it's the period it would take for your business to get back to where it would have been if you'd have never had the fire. So if you've got a growing business and you're closed for 9 months, your customers, they're going to buy whatever it is you supply to them from somewhere. It just won't be from you. And getting those customers back from your competitors will be very hard work. They're difficult to get customers, very easy to lose. And to get them back again is not generally something that can be achieved within a very short period after you've reopened. So you need to have more than 12 months. It's difficult to think of any business for which 12 months would be long enough. When I've been asked that in the past, the only answer I come up with is a high street newsagents who could, if they were destroyed in a fire, say, they could probably find another shop in the high street that they could occupy short term whilst their premises are rebuilt, and they can restock and get new shop fittings probably within a week or two. Certainly the stock will come from their wholesaler on the back of a lorry the next morning, the chocolate bars and magazines and whatever it is. Shop fittings might take a week, but that's about the only kind of business where 12 months would be adequate. Supply chain issues. If your business is reliant on certain suppliers, what would you do if that supplier suffered some catastrophic event and could not supply you? Now, for some businesses this won't be relevant because they're buying from hundreds of different suppliers and no one of them is critical. But for many businesses there will be a handful of suppliers where if they had a major problem, it would cause a major problem for your business. And you can insure against that risk. And if that is an area where you may be exposed, that is a conversation you need to have with the broker to make sure, at least you've actively thought it through rather than just hoping everything will be okay. I mentioned the Amcor fire. One of my big clients is a major food manufacturer, biscuits. And if you buy a packet of chocolate digestive biscuits, they are wrapped in a plastic film. That film is made by a huge packaging company called Amcor, who a couple of years ago had a completely catastrophic fire at their factory in Livingston in Scotland. And my client ended up with virtually half of their factories closed because whilst they could bake the biscuits, they couldn't pack them. And not only did the factory burn down, but they had over 2,000 gravure rollers for all of their different product ranges, and each colour separation within each piece of artwork has its own roller. They were all destroyed. And so was about 3 months worth of stock. It was all wiped out. And fortunately, they weren't affected financially because they had 3 years cover, and they had a supplier's extension, as it's called, that included their supplier Amcor. If they hadn't have had that, it would have cost them many, many millions of pounds. I've overrun a fraction, I think, although it's telling me I have 9 minutes left, but I think that's wrong. Are there any questions? And I should also say I will be around if anyone wants to come and ask me anything outside of this forum. Yes. Sorry, I cut.
Yeah, hello. Yeah, should we invite our brokers, insurance company, to our business premises
Yes,
to check out everything?
I don't think a broker could properly advise just on the back of a phone call. Perhaps not every single year, but I would say at least every other year they need to come and see you, see what you're doing. How else can they know what your business is about?
Yeah, we insure through a broker. I was thinking more of the actual insurance company
The insurance company, they will often send their own surveyors to carry out risk surveys. I mean, it depends on the amount of cover that you have. So that's, you don't need to insist on that. If the insurance company want to come, that's fine. If they don't want to, that's fine as well. But your broker certainly needs to come and have a look around. Yes. Just hang on a sec.
How do you get a reinstatement value for a building, including all the services?
You speak to a surveyor who will, if they don't do it themselves, they will certainly know other surveyors who do valuations of this kind. Any firm of valuers should also be able to prepare a reinstatement valuation. The problem is that is not a standard part of a valuation carried out for a bank. It's a kind of an optional extra, as it were. And if they've done a valuation for the bank, it won't cost a lot more for them to do a reinstatement valuation. They'll have all of the measurements. They'll know what the building is made of, are they brick walls or cladding walls or what have you. And they'll be able to do a proper reinstatement valuation fairly easily. If they've done a bank valuation, it's possible they could do it without even coming back to inspect the building again. Just do a desktop
Thank you.
exercise. Yes, sir.
So what is the service your company offers? Is it a reactive or do you do a proactive
Well,
service?
two things really. We offer a service after the event. When you have had an incident, we will come in and fight your corner with the insurance company and their loss adjusters. Insurance company will appoint a loss adjuster who is acting in the insurance company's interest. We come in and act in your interest and do sort of arm wrestling, if you like, with the loss adjuster to make sure you get everything you are entitled to under the terms of the policy. And also, sadly, on occasion, if there is an area of the policy where it lacks the cover that should be in place, it is sometimes appropriate to advise our client that their remedy to recover their uninsured loss will be to sue their broker for negligence. That happens quite a lot, much more than it should, because the brokers, I shouldn't really be needing to give this speech because the brokers should get it right, but it doesn't happen always. And proactively we offer a service where we will come in and review the cover that you have in place, work out the cover you should have in place, and then effectively put that out to tender with a number of brokers, including your existing brokers, and that way you know you are going to get the right cover that you need and get the cost of that down to a proper figure. Okay, I'm conscious I'm intruding into the next presentation now. Thank you very much.